So how does a corporate titan, a seemingly untouchable giant, get brought to its knees? We're not talking about a market crash or a recession, but a single message, just one tweet sent out into the world. Let's unpack this incredible story.
Just look at this number, 70%. I mean, for any company, that is an absolutely catastrophic loss.
And get this, that's how much the stock of a multi-billion-dollar healthcare empire just plummeted. And the craziest part? All of this happened in just a few weeks. So you have to ask, right? How on earth does a company lose nearly everything that fast?
Okay, to really get how this all went down, we have to go back. We have to see what this company looked like at its absolute peak. So let's rewind the clock to right before the disaster struck.
$10 billion. That was the valuation of NMC Health. We're talking about a massive London-listed hospital operator that honestly seemed like an absolute fortress of stability. And this wasn't just some number on a spreadsheet. NMC had a huge, real-world footprint. We're talking over 200 medical facilities. They were a dominant force in their industry.
And this quote, it just perfectly captures how everyone felt about them. Analysts loved them. Investors trusted them. The consensus was, hey, this is a blue-chip company you can count on. No question.
So, a perfect picture of success, right? Stable, growing, respected. But here's the thing, and this is the crucial point. Behind all those impressive numbers and glowing reviews, that calm, it was a total illusion.
So, what shattered that illusion? Well, it wasn't some big government investigation or an insider leak. Nope. It all started with one single digital domino being pushed over.
So, picture this. December 17th, 2019. A tweet goes live. The effect is immediate. I mean, within minutes, traders are scrambling, and panic selling begins. And then, over the next few weeks, the stock just goes into an uncontrollable freefall.
And this is the tweet, the one that started it all. It's from Carson Block of Muddy Waters Research. Now, if you don't know, Muddy Waters is a short seller. That means they basically bet against a company. They make money if the stock price goes down. And look at this tweet. No vague warnings, no beating around the bush, just a direct accusation, fraud, and misrepresentation. It was basically a declaration of war.
So that tweet, it wasn't just a tweet. It was a signpost pointing to a super detailed report. And inside that report were the allegations that would ultimately burn the entire company to the ground.
And listen, these weren't small claims. We're not talking about minor accounting errors. Muddy Waters laid out a case for systemic, deep-rooted fraud. They alleged NMC was inflating its assets, hiding massive amounts of debt, engaging in all these suspicious side deals, and even just straight up lying about how much cash it actually had.
Yeah, this slide really just puts the whole conflict in the starkest terms possible. On one side, you've got NMC's public image, strong, reliable financials. And on the other, you have Muddy Waters' just damning verdict that the company's books were fundamentally misleading.
So you've got two completely opposite stories. The market had to choose which one to believe. And its decision, it was swift, it was decisive, and it was absolutely brutal. I mean, just look at this chart. It says it all. Before the report, you have a $10 billion company. And then, just a short time later, its value had been completely eviscerated. Now, the company tried to deny everything, of course, but it didn't matter. When you're facing allegations this serious, investor confidence can just, poof, completely evaporate.
It's really a stark reminder, isn't it? A corporate reputation that took decades of painstaking work to build was just utterly demolished. Not in years, but in a matter of days. The sheer speed and totality of the collapse, it's just staggering. So, the market delivered its verdict, no hesitation. But the story doesn't actually end there. It really makes you wonder, right? In this age of instant information, where a single tweet can literally move billions of dollars, how many other corporate fortresses out there are just one viral post away from a total collapse? For the rest of this incredible story, wait for more.
Okay, so the bombshell drops. It comes in the form of a tweet from a short seller, an investor who's basically betting that the company's stock is going to fail. And from that one single moment, the damage starts. But it starts from the inside out. The accusations of financial fraud start swirling, and the company is just thrown into absolute chaos. Panic starts to set in, and its entire leadership structure just begins to crumble. And the speed of this collapse, it was just staggering.
This wasn't some slow, gradual decline. No, this was a complete and total freefall. I mean, look at this timeline. Within the first week, the CEO is gone. By week 3, the chief financial officer is put on leave. And then just 1 week after that, board members are running for the exits. This kind of rapid exodus from the top brass, it sends a very clear, very terrifying signal to the market. Something is seriously, seriously wrong here. So, as the investigators start digging through the wreckage, all those rumors start turning into hard, terrifying facts. And we're not talking about small accounting errors here. They uncovered a staggering amount of hidden debt. We're talking billions of dollars that no one knew about. The financial reports, they were a mess. The company's own valuation of its assets, massively inflated. That tweet hadn't just made an accusation, it had pulled on a single thread that unraveled a gigantic fraud.
All right, so all of this internal chaos was about to spill out into a full-blown public crisis. With the leadership in shambles and the shocking discoveries coming to light pretty much daily, the situation just spiraled completely out of the company's control. This was it. This was the point of no return.
And then this happened. These are two of the most dreaded words for any company on the stock market. In early 2020, the London Stock Exchange just slammed on the brakes. Trading in NMC Health shares was frozen. Halted. Done.
You know, a trading suspension isn't just a timeout. It's a massive, flashing red flag for the entire financial world. It's basically the stock market's way of saying, hey, we no longer trust the numbers this company is telling us. For investors, for the banks, for literally everyone involved, it means the entire foundation of the company's value might just be a complete lie. The second that trading was suspended, the floodgates just burst open. The bank started calling, demanding to know what on earth was happening with their money. Creditors started to seriously doubt the company could even survive, let alone pay back its debts. And of course, the employees were left terrified, fearing for their jobs. The company was now totally isolated. Its fate was sealed.
And this brings us to the final fatal chapter for NMC Health. With all the trust completely gone and its finances totally exposed, the company had absolutely nowhere left to turn. The final collapse was really just a matter of time, and it was right here that the true, unbelievable scale of the deception would finally be laid bare for everyone to see. Just look at that number, $4 billion. That's what was at the very heart of this fraud, a mountain of hidden debt that was never ever reported to investors. This one number, it explains everything. It's why the company's books were pure fantasy, and it's why the collapse was so total and so incredibly fast. So the final chapter plays out in April of 2020. That's when the company entered administration, which is basically the UK's version of bankruptcy. First, they discovered massive cash shortages, meaning they couldn't even pay their bills. Then, because they couldn't meet their obligations, the banks, their very last lifeline, pulled all their support. And that was it. Game over. The once mighty hospital group was officially bankrupt. But the story doesn't really end with the bankruptcy. The collapse of NMC Health left behind this really powerful legacy, one that sent shockwaves all through the financial world. You see, this wasn't just another company going under. It became a defining case study on just how vulnerable our modern, hyper-connected markets really are. So, what can we take away from all this? Well, first, this story proved that a single post on social media can be the spark that burns down a corporate giant. It showed us that short sellers, who are often painted as the villains, can sometimes be way more effective watchdogs than traditional analysts. And maybe most importantly, it's a stark reminder that massive fraud can hide in plain sight, even in a huge, respected public company. It really forces investors to be more skeptical than ever before. Ultimately, I think it all boils down to this one powerful idea. In our age of instant information, the perception of truth can literally rewrite reality, especially when it comes to money. The second the perception of NMC Health as a fraud took hold, its entire existence as a multi-billion-dollar company was just erased. And it happened in a matter of weeks. And that leaves us with one final, pretty unsettling question to think about. If a single tweet can expose a rot so deep that it brings down a titan like NMC Health, then in this new reality of intense public scrutiny and lightning-fast information, what company, anywhere in the world, is truly safe from its secrets?